Taxation Review for Final Exam. 1. True or false? A. Under the train law, individual taxpayers are still entitled to claim deductions for personal exemption in the amount of 50,000 pesos, 2.5 points. Answer false. Under train law, it provides for the removal of personal exemption and additional exemption. B. 13th month pay and other benefits are exempt up to 100,000 pesos per year. 2.5 points. Answer false. The 13th month pay and other benefits are excluded from gross income, provided that they do not exceed 82,000 pesos. In the handout is 82,000 to 90,000 pesos. Any excess thereof is considered part of the compensation income of an individual, hence, subject to income tax. Section 32, B, 7, E, NIRC, as amended by train law. C. Fringe benefits received by managerial and supervisory employees are still subject to income tax, as a general rule. 2.5 points. Answer true. D. Resident citizens are taxable on their income earned within and without the Philippines. 2.5 points. Answer true. 2. A. How do you differentiate gross income taxation from net income taxation? 5 points. Net income taxation is a system of taxation where the income subject to tax may be reduced by allowable deductions. Net income taxation: A income is taxed at net. The taxpayer may claim allowable deductions. Gross income taxation: A is a system of taxation where the income is taxed at gross. The taxpayer under this system are not entitled to any deductions. B. What are the sources of income, in the general sense? 5 points. Answer: income, as to their sources, may be classified as follows. A. Income within the Philippines. B. Income without the Philippines. And C. Income partly within and partly without. 3. A. Under the train law, explain the options available for mixed income earners, compensation and income from business/profession, whose gross income are within the threshold amount, and what is their rate, percentage, of income tax based on what figure, gross or net. 10 points. Answer: for mixed income earners, earning both compensation income and income from business or practice of profession, their income taxes shall be: 1. For income from compensation, a graduated income tax rates for individuals, and 2. For income from business or practice of profession, A. Gross sales, receipts which do not exceed the VAT threshold of 3 million pesos is either 8% income tax on gross sales, receipts and other non-operating income, or graduated income tax rates on taxable income, at the taxpayer's option. B. Gross sales, receipts and other non-operating income which exceed the VAT threshold of 3 million pesos, graduated income tax rates for individuals. 4. What is the special treatment or special tax rate for proprietary educational institutions and nonprofit hospitals under the Train and Create laws, and when will the special rate revert to the old rate? Include explanation what is meant by nonprofit. 10 points. Answer: the special treatment or special tax rate for proprietary educational institutions and nonprofit hospitals is the 1% tax rate from July 1, 2020 to June 30, 2023, and 10% tax rate in July 1, 2023 in the net taxable income tax space. The gross income from one related source does not exceed 50% of total gross income. Nonprofit entity is an organization that engages in activities for both public and private interest without pursuing the goal of commercial or monetary profit. 5. A. Discuss the concept of de minimis benefits and whether it is taxable or not. Give examples in your explanation. 5 points. Answer: de minimis benefits. These are facilities or privileges furnished or offered by an employer to his employees, managerial, supervisory or rank and file, that are of relatively small value and are offered or furnished by the employer merely as a means of promoting the health, goodwill, contentment and efficiency of his employees. De minimis benefits, furnished or offered by an employer to his employees merely as a means of promoting the health, goodwill, contentment, or efficiency of his employees, are not considered as compensation subject to income tax and consequently to withholding tax. As such, de minimis benefits, if given to supervisors and managerial employees, They are also exempt from the fringe benefits tax. B. What is tax arbitrage in relation to the deductibility of interest expense? 5 points. Answer. Tax arbitrage in relation to the deductibility of interest expense is a strategy which takes advantage of the allowable deduction for interest expense. The taxpayer's allowable deduction for interest expense is equal to 20% of the amount of interest income subject to final tax. Purpose. The purpose of the tax arbitrage is to equalize the tax liability of the taxpayer on his interest income and the tax benefit on his interest expense. 6. A. Is a general professional partnership taxable? What about the share of the individual partners in the net income of the partnership? Can the individual partner claim deductions for his income tax? 5 points. No. General professional partnership is not subjected to income tax. The distributive share of each partner in a general professional partnership shall form part of partner's gross income in its individual tax returns subject to graduated income tax rates. Yes, in the case of a general professional partnership not subject to tax, the partner's share in the net loss of the partnership may be claimed as a deductible expense in his personal income tax return. B. What are the requisites in order for retirement pay to be exempt from income tax? 5 points. Reasonable private benefit plan, RPBP. Conditions in order to avail the exemption under a reasonable private benefit plan. 1. The RPBP must be approved by the BIR. 2. The retiree must have been in the service of same employer for at least 10 years at the time of retirement. 3. The private employee or official must be at least 50 years old at the time of his retirement. And 4. The benefits under the reasonable private benefit plan must have been availed of only once. 7. Mr. Money Payqua worked as a seaman abroad. He received a salary of $2,000 for 2020. He has a trucking business in Butuan City, from which he earned a net income of 50,000 pesos, and a mini grocery in Cabadburn City from which he netted another 50,000 pesos. Which of the above incomes shall he report in his 2020 ITR? Reason out your answer. 10 points. Answer. Seamen working abroad are taxable only to the income derived by them within the Philippines. Thus, Mr. Money Payqua shall report only in his ITR the following income: A. Net income of 50,000 pesos from trucking business in Butuan City, and B. Net income of 50,000 pesos from his mini grocery in Cabadburn. 8. A. What is a capital asset as compared to an ordinary asset? 5 points. Ordinary assets refer to properties held by the taxpayer used in connection with his trade or business, which includes the following: A. Stock in trade of the taxpayer or other property of a kind which would properly be included in the inventory of the taxpayer if on hand at the close of the taxable year. B. Property held by the taxpayer primarily for sale to customers in the ordinary course of trade or business. C. Property used in the trade or business of a character which is subject to the allowance for depreciation provided in the NERC. And D. Real property used in trade or business of the taxpayer. Capital assets include property held by the taxpayer, whether or not connected with his trade or business, other than ordinary assets. B. Discuss what is the valuation basis of the BIR in computing the capital gains tax and documentary stamp tax on the sale of a capital asset that is a piece of real property located in J.C. Aquino Avenue, Butuan City. 5 points. The final gains tax on the sale of capital asset, real property, is computed as follows. Tax base is either gross selling price, fair market value, or the zonal valuation, whichever is higher. Tax rate is 6%. Documentary stamp tax on the sale of a capital asset, the tax rate is 1.5% or 15 pesos for each 1,000 pesos of the sale price, area value or market value of the property, whichever is higher. 9. A. Discuss the effects of the train law and the current socio-economic situation in the country. Are you in favor of implementing the second tranche of the train law? 5 points. 1. Higher take-home pay and therefore improve spending power. 2. The higher excise slapped on oil products and other goods and services under the tax reform for acceleration and inclusion, Train, Act pulled more Filipinos into poverty, according to state-run think tank Philippine Institute for Development Studies. PITS. Inquirer.net. B. Explain optional standard deduction as a method of deduction from income for using the graduated rates, new rates under the train law. 5 points. Optional standard deduction is a fixed percentage deduction which is allowed to certain taxpayers without regard to any expenditure. This is in lieu of the itemized deduction. The optional standard deduction is an amount not exceeding 1. 40% of the gross sales or gross receipts of a qualified individual taxpayer, or 2. 40% of the gross income of a qualified corporation. Section 34, L. NIRC. The election to claim either the OSD or itemized deductions must be signified in the income tax return filed for the first quarter of the taxable year. Unless the corporation signified in his return his intention to elect optional standard deduction, it shall be considered as having availed itself of the itemized deduction. Once the election is made, the same type of deduction must be consistently applied for all succeeding quarters and in the annual income tax return. In other words, the choice shall be irrevocable for the taxable of year for which the return is made. Note: a taxpayer who is required but fails to file the quarterly income tax return for the first quarter shall be deemed to have elected to avail of itemized deductions for the taxable year. 10. A. University of San Carlos, USC, a non-stock non-profit educational institution, operates a canteen and a bookstore inside the campus, and earned a net income of 10 million pesos. Is it liable to pay income taxes for the operation of the two businesses? Discuss and justify. 5 points. Both the operation of the bookstore and canteen inside the campus by University of San Carlos, USC, were not liable for the payment of taxes. Under the law, incidental income from canteen, bookstore and dormitory, provided that these facilities are owned and operated by the school itself and are located inside the school campus, is tax exempted. B. What is minimum corporate income tax, MCIT, and when can it be applied or used as tax credit? 5 points. Final answer: the minimum corporate income tax is equal to 1% of the gross income from July 1, 2020 to June 30, 2023. And 2% of the gross income, beginning July 1, 2023, of the corporation at the end of the taxable quarter, except income exempt from income tax and income subject to final withholding tax, as amended by Create Law. The imposition of the minimum corporate income tax is designed to prevent the prevailing practice of corporations of overclaiming deductions in order to reduce their income tax payments. Being a minimum income tax, a corporation should pay the minimum corporate income tax whenever its normal corporate income tax is lower than the minimum corporate income tax, or when the firm reports a net loss in its tax return. Conversely, the normal corporate income tax is paid when it is higher than the minimum corporate income tax. DIMA AMPAL, 2015.